your supply zone is creating, your liquidity is creating, then it gives a perfect reaction, everything is absolutely perfect, and then it dumps for a massive win, but you didn't catch it because you didn't know how to enter, and that's really painful. So inside this video, I'm going to show you the best 3 entry models for supply and demand trading. Learn these and you'll never miss trades like this. You can massively boost your risk reward and get in at better prices. And stick around to the end because the 3rd entry model is literally that changed everything. Without further ado, let's get into this video. Alright, so here's exactly what you learn inside this video. So I got 3 entry models, which is directional close entry, a break of previous candles wicks, and then a flip entry. And I'm going to show 3 examples for each entry model so you can absolutely master this topic. There's no rewatching any other video. And by the end of this video, I've also made a quiz so you can test your knowledge on what you've learned inside this video. So make sure you got your notebook out and you just focus inside this video so you can get 10 out of 10 in the quiz. So for my first entry model, I want to explain the most common one and the best one. Well, not the best one, but the most common one, which is I usually get, which is a directional close, which is the most simple one as well. So a directional close is when you just enter on the first bullish candle to react from your demand zone, and on a supply zone example, it's the first bearish candle to react from your supply zone. So in this example, a directional close would be just as this bullish candle closed, and right here you have a 1 pip stop loss. Now, if some of you don't know what strategy I trade, which is just normal supply and demand, but having liquidity above or below our zones. So as you can see, this is my wick. So below the lowest wick that came in the zone, I have 1 pip. So this 16.6 to 17.6, just like that. 17.5. Okay, 17.6. This is your liquidity, and this is liquidity taken out. So now I'm not going to go over that because I'm just going to go over the entry models. And that is a directional close. So let's say you have a zone like this, okay? You have your first candle tap inside the zone, but this candle here is bearish, all right? This candle here, let's say it's bearish. The next candle opens right here. This taps into the zone as well. Well, it doesn't have to, but let's say it taps in the zone and then it closes bullish. You would enter right here. As soon as this candle closes bullish, you'd have a 1 pip stop loss below the deepest wick that went inside the zone. And then, as you can see, well, let me just make this a bit easier. So this here is a bearish candle, that is a bullish candle. You would enter on the first bullish candle to react from your demand zone. And on a supply zone example, let me try to make another example. You have a, well, that is a, okay, my bad. There you go. That is a bearish candle. And then this here is the first bullish candle to react from your zone, for example, just like that. So you see, you would not enter on this bullish candle. You would enter on the first bearish candle to react from your zone. And the reason for that is because you would have such a low win rate if you just like enter as soon as it taps the zone, because come on, it could just burst through the zone on the next candle. So as you can see, you would enter right here as soon as that bullish candle closes, 1 pip above the deepest wick that went into a supply zone. I just fumbled it. As you can see, this is a directional close. I got 3 other examples right here as well. So this is another example of a 1 candle liquidity with a fake out. And as you can see, you would have a directional close as soon as this bullish candle closed. All right. And a stop loss of 1 pip below the deepest wick that went inside the zone, just like that. And a directional close right here. You would not enter as soon as it taps the zone. You would not enter right here. You would enter as soon as this bullish candle closes. And that will be a directional close. And I have another example right here as well. As you can see, just this demand zone. Liquidity right here. Liquidity taking out its own high. And you would enter right here with a max stop loss of 30 pips because it's going to be otherwise too massive for stop loss. Just like that, 30 pips. And that's a directional close. You could also wait for the next candle's bottom wick and then you can enter right here. So as you can see, let's say this bullish candle closes. All right, you would enter as soon as the next candle closes. It probably is going to come with a lot of volatility and create a lower wick so you can get a little bit of a better entry. That's usually what I do sometimes. Only sometimes, because sometimes you can actually miss crazy trades. For example, if you were to wait for the next candle's bottom wick right here, you would miss this trade because it didn't create that bottom wick. So you need to be careful on that topic as well. But other than that, this is the first entry model that is explained. Let me now go over the break of candle, which is the break of previous candle's wick. Alright, so I have another 3 perfect examples for this entry model, and the first is the one I showed in the intro. So as you can see, you have a supply zone, decent level of liquidity, decent level of taking out its own low, disrespected this demand zone, which makes it even more better, and it's just bearish trend. So as you can see, a break of candle is when you enter on a supply zone example, the previous candle's lower wick. So as you can see, you would not enter on this bullish close, as you can see, because you would enter on the first bearish candle, and as you can see, you would not enter on the directional close because it had a break of candle. Now, a break of candle entry is right here where it broke the previous candle's wick. So let me make a drawing example as well. So as you can see, this candle is that candle right here. So the next candle opens where the previous candle closes. So right over here, let's say it made that top wick, yeah, and now it's coming down, Let's say it closed right here. This would be a directional close, but it didn't do that. It came all the way down over here, and once it passed this point, which is a break of previous candle's wick, you would enter as soon as it breaks that. But don't do it too early inside the candle. So make it like the last 20 minutes, last 50 minutes of the candle, because if you do it too early, then it's going to have that break of candle and then it's just going to go back up, which is going to be really painful. So yeah, just go on the break of candle, usually later in the candle. Don't go too late as well, but somewhere in the 15 minute to 5 minutes left in the candle, that's a good place to take a break of candle entry. And let me show you a demand zone example as well, so you don't understand it both on supply zone and on a demand zone. All right, so let's say you had this bearish candle tap into your zone, as you can see, but you would not enter yet because it's not bullish. So as you can see, the next candle opens right over here, makes it bottom wick, taps into the zone. Or let's say it didn't make that tap into the zone, just made that small bottom wick. It came all the way up. If it closed right over here, that's just a bad drawing example, but let's say it closed right over here, you'd enter just on a directional close. But let's say now it goes all the way up, and once it passed this point, exactly where you enter. So that is the break of previous candle's upper wick, and that's the break of candle entry. I got 3 other examples right here in here as well. So here's another supply zone example, as you can see. Now this is obviously news, but it's still a good example for break of candle and how useful it could come. Let's say this wasn't news, and just imagine how much useful it came. Imagine entering right here on a directional close. I mean, what is this? You want to go for a 1 to 0.3. That's just insane. So yeah, let's say you went on a break of candle. That's just an insane difference. So yeah, break of candle is when it broke this bullish candle's previous wick. As you can see, let me go on a replay mode, for example. As you can see, if at some point later in the candle, it breaks this wick right here, you enter. And as you can see, it broke that wick right here, and then you enter as soon as it breaks in. And I've got another example right here as well. As you can see, a directional close would just be right here as soon as this bearish candle closes, and on a break of candle, you enter on the previous candle's lower wick, like previous candles when it broke it, just 1 pip above the zone stop loss, 8.6 to 9.6, and you enter on this candle. Let me just go replay mode again. As you can see, you don't enter yet because it's a bullish close. You'd enter as soon as it breaks this candle right here, or just wait for a directional close, because break of candles and all these entry models are actually more aggressive. But if you just want to be extremely safe, just always wait for the directional close. But I'm telling you right now, flip entries, break of candles, they have come in so much handy, bro. They have been so good sometimes. Like, imagine that trade right here. You could have saved a lot of percentage just from that simple entry model. So yeah, you enter on as soon as it breaks this previous candle's lower wick. As you can see, it did right there, and then that's exactly when you enter. So now you guys know what is a directional close. You also know what is a break of candle. But now let me go to the actual crazy entry model. All right, this entry model has literally given me so much results, and it could save you a lot. So let me just go find some 3 examples, and I'll see you then. Okay, so for our third entry model, I've got the flip entry. So as you can see, you have this clean demand zone right here with a clean level of liquidity. Nice fair value gaps, nice move up to the upside. Liquidity taking out its own high. Breaker structure to the left side as well. Direct movement to the zone, having a fake out right here as well. All that is extremely clean. But now, let me go over the entry model. So first, let me actually go over the other entry models earlier. So a directional close here would be first candle to close bullish. So as you can see right here, a break of candle would be the break of previous candle's upper wick. So right here, and a flip entry would be right here. And the reason for that is because it flipped bullish. It's that simple. It is really simple, but it might be a little bit hard to enter on these so in the live market. So let me actually explain. First, you can actually see that, let's say we targeted this high, for example, that's a 1 to 4.4. This is just a massive difference. As you can see, that is like nearly 3% difference. So it is extremely insane. So let me actually explain. As you can see, you would not enter on this candle, all right? Like I said, not enter on the first bearish candle to react from your zone. And as you can see, you would enter as soon as this flips bullish. So it came deep inside the zone, and then it came all the way up and flipped bullish. So let me explain it on the drawing example here. As you can see, the next candle opened right here. Let me just make this bullish. Enter right here. So if it made something like this and then flip bullish, you would not enter because it didn't come deep enough inside the zone. If it came over here, that is deep enough, and then you can enter on a flip entry. Usually it comes more with experience, so you guys need to backtest as well, see how deep enough it has to come. But in this example, it came enough. It came really deep inside the zone, and when it was all the way over here, it did not go through the zone because otherwise it would have invalidated the trade. So what it did, it was bearish this whole time, and then it came all the way back up, and as soon as it flipped bullish, you would enter. All right, let me tell you on a supply zone example. All right, let's say you have a zone like this. Okay, you have a bearish candle to react from your zone like that, and then you have a bullish candle before that to react from the zone as well, just like this. I mean, that's not the best example. Now let's say this here is the wick. All right, it came deep enough inside the zone. Well, it's not allowed to close inside the zone. Let me just delete all this. All right, my bad. Just wait. As you can see, for example, let's say this candle opens right here, right? It comes deep enough inside the zone, goes past this level, and then it comes all the way back up. And once it flipped bearish, all right, this part here is all bullish. Okay, this part, as you can see, and then it comes all the way back down with bearish. And once it flipped bearish, you enter. And then sometimes it can close all the way down over here because you entered on the flip entry. And this is why it's completely useful. So as you can see, you would not enter on a directional close, not a break of candle, but the flip entry all the way down over here. And then you can hit insane trades just like this. And I'm going to show you two other examples as well. So sometimes it can come really useful, and sometimes it might not even come that useful. So in this example, it didn't actually come that useful, but I'm still going to explain it. So as you can see, you have a clean demand zone with a clean level of liquidity, taking out its own high into all this clear space, so you can have so much move to correct. And as you can see, I also took this trade live. I mean, I'm taking most of these trades live, but as you can see, our directional close would be just right over here. As you can see, just the directional close. But a flip entry would be right here. And as you can see, it didn't come deep enough inside the zone, but it was deep enough of a wick. So for example, if this bearish candle closed over here, all right, and this bullish candle opened over here and it made that lower wick and then flipped bullish, then it wouldn't be actually like a flip entry because it is not a deep enough of a wick. Now it's hard to actually explain it here. I hope you guys understand. But as you can see, it made deep enough of a wick. You do not enter like over here or as soon as it taps the zone. You would enter as soon as it flipped bullish. All right, as soon as it flipped bullish. And this again, you don't actually want to take it too early inside the candle. So you want to take it potentially like in the last 50 minutes. And then Obviously, it isn't that much of a difference. Let's say you went at the high here for 1 to 5. With a flip entry, it's a 1 to 5, and with a directional close, it would have been a 3.3. So you would have saved 1.7%, and that is really, really useful. Let me go over one more example, and then we can go over to the quiz, which you guys been waiting for. And in that quiz, I'm just going to show you entry models, and I'm going to ask you which entry model you think this is. And if you get it correct, if you get 10 out of 10, then congratulations. I mean, let me know in the comments as well your score. But now let me find one more example of a flip entry. Actually, I got a few trade examples over here as well. As you can see, that is a directional close. That is a directional close. And this over here is a directional close as well. But yeah, let me find quickly a flip entry. All right, so I quickly found another example here. Now, this trade is obviously not A+, as you already can see. We're just extremely bullish. We took out the low with lots of news, so it's not really A+, but I can still explain the entry model. So as you can see, you have a supply zone, clean supply zone, just not good structure. But as you can see, a directional close would be just right here, and as you can see, just right over here. A break of candle would be right here, break of previous candle's wick, and a flip entry would be right here. And the reason for that is because it made a massive wick, tapped inside the zone, and then it came all the way back down and flipped bearish. Now, I showed you a example of two bullish examples, and now this is a example of a supply zone of a bearish example. As you can see, it came all deep enough. So as you can see, it made all this big wick, and then it taps inside the zone, and then it came all the way back down. And as soon as it flips the color red, then you enter. All right, and it doesn't have to be like just a small like flip. Like, it's hard to actually explain it here because you're gonna have to see it live. But if it sometimes flips, it just messes around in the entry, and that's exactly when you don't want to enter. So you only want to enter when it comes down with a lot of bearish momentum, not like it stays stuck in this entry place, and then that's just not the best. And again, like I said, in the last 50 minutes of the candle, it doesn't have to be exactly the last 15 minutes, so you don't have to be always 60 minutes. I'm not going to take it, but if you take it, imagine in the first 5 minutes, it's not going to be really that worth it, obviously. So yeah, that is about it for the entry models. There are some other entry models as well, which I actually don't even personally use. There are things like taking a 15-minute break of candle. I mean, I've actually used them in the past, but it's not really my thing, to be fair. It's really aggressive. For example, taking a directional close on the 50-minute time frame, or taking a break of candle on the 50-minute time frame. But even that, you already know all the 3 entry models that I use. I only have 3. The most common is directional close, the most aggressive is flip entry, and the most potential is break of candle and flip entry, obviously. So now you know all the entry models. I hope you guys focused inside this video, because now I'm going to go over to the quiz. I've got 10 questions, and I hope you can answer all of them. And yeah. This is a flip entry, and thank you for watching this video. Subscribe, like the video, join my free Discord, and yeah, keep learning, keep discipline, and yeah, stay profitable.